When you think of September, it really is the worst performing month of the year. And after we had, like you just said, 7 months in a row of positive performance, a very long win streak for the market, it's natural to get a little bit nervous, especially when you look at the backdrop that we're entering. We did just have an excellent earnings season for the S&P 500, which was a positive. But as we look forward, there's a lot of things that could lead to a rockier road. Most of them driven by events in Washington. So we've got an infrastructure package. It's going to be continued to be talked about. We've got a spending package, $3.5 trillion budget that needs to be passed. Taxes are likely to accompany that. There could be a potential government shutdown. Then you've got the debt ceiling debate and the potential reappointment of Fed Chair Jay Powell. So there's a lot on the table that could move markets this month, especially since August, which is historically the third worst month of the year, was such a strong month. So this month might be rocky, but we're still optimistic about what the end of the year could bring.
And also some concerns now around the state of the U.S. consumer, Lindsay, following that U.S. consumer confidence number dipping to a 6-month low. This comes after retail sales dipped in the month of July. Is this something that you're watching closely, and could this start to have a broader effect on the market?
Yeah, I mean, definitely with the consumer confidence and sentiment reports that we recently got, you can see that the consumer is starting to become more cautious, especially I think it really dovetailed with the increase in Delta cases. And so I think it's an emotional impact that you're seeing in the consumer, because when you dig into the data deeper into some of the internals within those reports. For example, the Conference Board Consumer Confidence, you saw the jobs are plentiful versus the jobs are hard to get reading. That really still remains at a historical high level. And as you know, we get the jobs report, the August jobs report on Friday, which we'll be watching very closely. I'm optimistic that the consumer is doing well. We do have, at the end of this month, another thing that could add a hiccup into the system is the removal of unemployment benefits. So we got to keep a close eye on the consumer, but I'm cautiously optimistic that they are still, their finances are in a much better position than they were pre-pandemic. The confidence levels have come down, but still remain in robust territory. Spending, I think, you're going to see pick up into the holiday season. So, just keeping a really close eye on the consumer.
What do you make of Walmart announcing that it's going to be hiring lots of people for this holiday shopping season? Is that a sign of confidence that retailers see demand growing despite this concern around the Delta variant and the consumer perhaps getting a little bit more cautious, as you just said?
Yeah, no, I think that's a positive sign. Certainly, if a retailer like Walmart is making preparations like that, you can read into that as a positive. The savings rate still remains extremely elevated. Deposits at banks, they've come down a little more recently, but still also very high, historically high levels. So the consumers' financials are in a much better position, like I said, than they were pre-pandemic. Given that last Christmas was, a Christmas that was practically forgotten because of COVID, we couldn't spend it with family and friends. I think people really want to make up for that this Christmas. The question is going to be, what are inventory positions? What are pricing? What does pricing look like? But overall, I think the consumer is excited to have what could potentially be a more normal holiday season this year.